Good day, ladies and gentlemen. I've been getting a lot of questions about the pre-market on the ASX lately, particularly around the match. So I thought I'd make a quick video covering all the things like surplus volume, the match price, the match volume, and how it sort of all works when it leads up to the market open. So unlike the US, we don't really have pre-market trading. What we have is a balancing act that happens from pre-market, which is pretty much, I think it's like 7:30 in the morning, leading all the way up to around 10 a.m., depending on the stock ticker. So for a stock like DEL in this example, this can open anytime between 10:02 to 10:02 and 30 seconds. So there's a 30-second randomized window. And when the stock opens, that's called the match, the moment it opens. And then anything after that is market open, and anything before that is pre-market. So we're going to talk about pre-market and the match. So in this example for DEL, we can see the last traded price was 16.5 cents. We can see the match price at the moment is 17.5 cents with a match volume of just over 40,000 shares with a negative surplus volume of 111,000 shares. And if you're using a different platform, it doesn't really matter. As long as you have live data, all this information should be available. Doesn't matter what platform you're using. This is really sort of basic order book information. So in this example, why do we have a match price of 17.5 when the last traded price was 16.5 the day before? Well, what we have is we want to look at the point where nothing happens. We want to see where the balancing begins. And in this case, if we have a bid of up to 17 and we have an ask of 17.5 and higher, we can see that the bids are at 17 and the offers are at 17.5, meaning there isn't an imbalance there at all because no one is buying more than 17 and no one's selling less than 17.5. So there's no exchange of shares. However, in this instance, what we have is we have these two, 17.5 and 18 cents, causing an imbalance. So what we have is these guys trying to buy into the offer. And what we have are these shares here that add up to 40,072. And what they're doing is they're buying into 17.5 here. And what's going to happen on match, assuming this is the final look of the order book, on open, we'll be left with 111,619 shares at 17.5 cents. So these 40,000 shares, or rather these 40,000 shares, will eat into the sell side, leaving us with 111,000 shares. So if the surplus is positive, that means on the bid, there'll be a 111,000 shares, but because it's negative, that means it'll be 17.5 on the sell side. So volumes will exchange at 17.5 and there'll be a remainder of 111,000 on the sell side. So that's how you interpret that information. So let's take a look at what happens if we add, let's say, an extra 30,000 shares on the sell side. We got 16.5 here, we added 30,000, otherwise the order book is identical. Now, this doesn't mean because our sell order is at 16.5 that we're going to sell at 16.5. We can see the match price is still 17.5. The match volume is still 40,742. But the only thing that's changed is the surplus volume. It'll be a negative 141,000 shares, meaning that's how much will be left over here. So what happens is a balancing act of all 30,000 shares here and the remaining shares, whatever that is, just over 10,000 shares from 17.5 will be balanced with these guys here. So all these sells will occur. All 40,000 shares on the bid will buy, and this 30,000 shares will sell along with the first roughly 10,000 shares from 17.5. So that's what that looks like. Obviously, you add more shares at 16.5. Let's say we add 42,000 shares at 16.5. Well, you'll notice that will push into 17, right? So we'll have more shares. There'll be an imbalance here on the sell side, and that'll be at 17. So just because we're selling at 16.5, 30,000 shares, let's say in this example 45,000 shares, right? So we're going to change that to 45,000, and there's only 40,000 shares in here between 18 and 17.5. So what we have to do is we have to dig into the shares here at 17 as well. So we're going to have to dig in an extra roughly 5,000 shares out of 17 on the bid. And that's how the order book works. And then we're going to have a surplus volume. It's not going to match at 17.5. It's going to match at 17. And then there's going to be about a positive surplus of around 126,000 shares. So that's how the order book works. I hope that provides some clarity to you guys. And if you find this content helpful, please do consider hitting that like and subscribe button. I'd appreciate that a lot. Otherwise, guys, I'll catch you in the next video. Cheers.